Hi everybody, welcome back to the channel, and today we're talking briefly about the Schwab U.S. Dividend Equity ETF. And I want to answer the question in today's video: how much would it take to make $1,000 per month from this ETF? And if you're interested in this ETF, you can head on over to dailyinvestmentadvice.com. We actually just wrote an article on this ETF. It's an in-depth article, and it goes over specific considerations if you're an investor, let's say, who is focused on growth or focused on dividends in particular, depending on your risk tolerance, your investing goals, and what you're seeking. So we have a detailed guide going over the dividends, and one consideration is the actual dividend itself. And so if we look at courtesy of NASDAQ.com, the most recent dividends include 0.611, 0.7423, 0.6545, and 0.6647. And so the annual dividend of $2.44, as you'll see right there on the NASDAQ page. And you'll see also that, this one has a lower beta than the S&P 500. So we have a beta of 0.89. You see that number down there at the corner, 0.89 beta, which basically means that this is less volatile than the broad market. And so looking at some of these most recent dividends, you can kind of get a feel for what you can expect per year. If we take this average dividend, let's say we add all these up, and we'll go ahead and do that now. We will take this and go over to calculator on Google and type this in and get a feel for what the average is in terms of how much we can make. And so per year, well, for some reason that didn't go through. Let's try that again. So $2.67 is what that comes up to. We will take this number, divide it by 4, come up with the average. Or if you want, you can divide it by 12 as well to get the monthly dividend amount, which is roughly 22 cents per share. And so per month, you're looking at, let's say, 22 cents per share. Now, to get up to $1,000 per month, you could ask yourself, okay, how many shares do I need to invest in this ETF? And if we take, let's say, a hypothetical amount of 1,000 shares, we could multiply that by 22 cents per month. And 1,000 shares is going to get us $222 per month. So not quite what we need. We will redivide that and come up with our original amount that we had. And let's just say now we multiply that by 5. So we take 5,000 shares. And now we're making over $1,000 a month. And so with 5,000 shares, you'll see here the dividend is 0.2227 divided by 5,000. Again, just for confirmation. So if we take this times 5,000 shares per month, we're looking at roughly $1,100 per month from this ETF. And so 5,000 shares at the current price, if we look at $77 per share times 5,000 shares, $77.24 times 5,000 is roughly $386,000 invested in this ETF to get over $1,000 per month. Now, the benefit of this ETF is that you have lower volatility relative to the S&P 500. So if you want to try to find a way to make that much money, you can do that. And you can also look at it from the perspective of, like, I'm getting a less volatile investment that can help to rebalance my portfolio, or kind of look at it from the perspective of, I'm looking at it, in terms of the overall return profile over the long term. And you'll see here that it's over 200% in terms of not including dividends, but just the return by itself, the share price is over 200% since inception in 2011. So you get a steady return from this ETF. But we're looking at the benchmark index, the Dow Jones U.S. Dividend 100 Index, and how it follows that and tracking errors and stuff like that. Also, you're getting a low expense ratio of 0.06, which, when you look at other peers, for example, different types of ETFs can charge anywhere in this range, especially for a similar strategy. And so lower volatility than the overall market, steady returns, capital appreciation over the long term, and you're getting, the dividends. And you can, figure that they pay on a quarterly basis, right? Roughly a 3% dividend yield, paid every single quarter, every 3 months. But on a monthly basis, you can also run those numbers as we just did. And so there's a lot to kind of like about this ETF if you're looking for a long-term solution and you don't want to have to worry about anything. If you just want to collect dividends, you could reinvest the dividends, or you could, pay yourself out in retirement, let's say. And I talk about this in the article, by the way. I talk about, I think it's in section 4 or section 5. We talk about specific recommendations in terms of what your investing goals are. And that's what I love about this website, guys. If you want to check out daily investment advice, we put a lot of work into producing high quality content that you can use as an investor. And so when it comes to this ETF, it's very exciting to think about the possibilities. And as a long-term investor, if you're looking at mitigating volatility while producing a savings vehicle for, let's say, like a Roth IRA, which we also talk about a lot in terms of avoiding those taxes, it's one of those things to really consider, guys. So thank you so much for tuning in to this video. Hope you guys enjoyed it. And it's a great way to produce dividends. I know I had a subscriber request that I make this video. And so I thought I'd go ahead and research this ETF and make this video for you guys. But with that being said, thanks so much for tuning in. God bless. Hope you guys have a great rest of your week, and we'll see you guys in the next video. Take care.